Hey guys, welcome to video 3 of the advanced training method, and in this video we're going to go over the most common reversal patterns so you can pick up when either price is going to come back down or when price is going to take off. Now the three most common ones, and there is a fourth one, but I'm going to go over that in a later video. Now, most common ones are bullish and bearish engulfing patterns. Now what this means is, and I'm on the 4-hour time frame because it's easier to spot patterns to show you guys examples. The higher the time frame, again, the more important and the more relevant the pattern is. Okay, so if you spot one of these patterns on, say, a daily time frame or a weekly time frame, that's going to overrule any patterns you find on, say, if you were to go down as low as the hourly time frame or the 15-minute time frame or something like that. Okay, so the higher the time frame, the more important that it is. Now, a bearish engulfing generally happens when we've made a new all-time high. Okay, and then what happens as price comes back down and people start to sell off? You get a big candle pattern here, which is much larger than the previous pattern, and that's what's called an engulfing pattern. Okay, so you can see this red candle here. So we've come up, we've made a new high, guys. Okay, we've hit a new level. People are starting to sell off. Now once you see this candle here, okay, this is an engulfing pattern because this candle here is larger than this candle, and it's a bearish engulfing because bears mean sell off. Okay, so bearish market is market coming down, bullish market is market moving up. So this is a bearish engulfing. Now you'll normally see these patterns most when you start to approach new all-time highs and new and previous resistance levels. Okay, so if price made it all the way back up to this kind of high level, and you started to see price start to decelerate, and then followed by one of these, you would expect a potential of price to move back down further. Okay, so this pattern here is a bearish engulfing. Now the flip side of that is a bullish engulfing. So once the market has had its sell-off period, okay, which we can see kind of happen down here. Okay, so all this way down here, we're making a new low, we're making a lower high. Okay, we're making a lower low, we're making a lower high, a lower low, a lower high, a lower low, a lower high, a lower low. Okay, and then as price gets consolidated and it's coming across here, this is a bullish engulfing. Okay, so this is the signal of a bullish market reversal pattern. So this is actually a huge bullish engulfing because this little guy here, okay, he's tiny compared to this massive up move in the market. Now what that signals is buyers coming into the market, guys. Okay, so the buyers have taken over the sellers and the market is going to start to move up to the upside. Okay, so that is bearish and bullish engulfings, and they are reversal patterns. So whichever way the market is heading, if you see if one of those patterns come the other way, okay, it's a good sign that price is going to move a certain, there's no set amount that it's going to move, but depending on the size of the bullish or the bearish engulfing compared to the previous candle, gives you a bit of an indication. Okay, so this one is huge, so we expect that buyers are coming into the market, so this is going to be a decent up move. And going into our second pattern, okay, which is a fantastic reversal pattern, is basically a head and shoulder pattern and an inverse head and shoulder pattern. So inverse head and shoulder pattern is when price is moving down. Okay, this price point here becomes our left shoulder. Price has come back up. Price has made a new low. Okay, that's our head. So that's our now this doesn't obviously form until you get the complete pattern. Okay, but to watch out for these kind of things, like if you got to this point here and you started to see market consolidate around this period, and then if you saw some sort of support or resistance around your previous low, which was this low here. Okay, that's basically forming a head and shoulder pattern. Now, so the middle bit is obviously the head, which is obviously the low or the high. Okay, so this is inverse. Okay, so as market's coming down, this is our left shoulder, this is our head, and this is our right shoulder. So on the right shoulder, that's our reversal pattern. Okay, and that's lined up beautifully with a bullish engulfing. So this little pattern here is an inverse head and shoulders, and we've got a bullish engulfing as well. And let's see if we can find a head and a normal head and shoulders to show the other way. So if we go this point here, so this is our left shoulder, this is our head, this is our right shoulder. Okay, so this is your normal, this is your shoulder, that's your head. Okay, and then price moves back down. So that's a normal head and shoulder. This is just the opposite, just called inverse head and shoulder. Okay, so this move, the inverse one, is coming into play for a bullish market. Okay, and then the inverse, the normal head and shoulder is coming into play for the sells. People will be looking at, you know, we got to this price previously, we broke out, we've actually come back down, you know, past our previous points. We've come back down. We've started to make new lows again. Okay, and then our new high becomes our right shoulder. So guys, when you put these patterns all together with everything else that you've learnt previously, you'll start to see why other professional traders see these patterns and use these patterns as well. So that's the head and shoulders. Now the last one, which is one of the most common ones, is what's called a double bottom or a double top, and you can get a triple bottom as well. Okay, so right now at current price, okay, you'll see this point here, that's our first bottom. Oop. And this is our double one. Okay, so right now from this point, that's a double bottom. So as price is moving down, when you start to see things like this and these levels, now in our previous video we went over the price was at that 6,000 level was a support level. So once you start to see double bottoms, okay, taking place near support levels, these are extremely good buying opportunities. Okay, because a lot of the time these patterns play out, especially around support and resistance levels, and you've got a very good chance in the market to make some very good money. Okay, so as you can see, this is our double bottom. Prices come back up, bang. Now we're starting to move higher again. Okay, so that's a double bottom. Now the opposite of that is obviously like a double top. We don't see a lot of double tops, mainly because once we reach a new all-time high, or once we reach a new high, we start to see the engulfings take over, the engulfing patterns and so forth, or the head and shoulder patterns. So double bottom and triple bottom is good for, definitely good for your buying opportunities. So these are the most common patterns that I look for, and most other professional traders look for as well, guys. Now the last one is actually triangles. So triangles play a fairly important role in cryptocurrency because more money is coming into the market. Okay, the triangle itself though is covered more in, I'm going to cover that in the trend lines video. Okay, because basically to form the triangle you're actually drawing trend lines. Okay, so a trend line is basically a support and resistance level on a slope. Okay, so if we drew a line from here down through these, you know, we start here, you get a touch here, that's like a false breakout. You get a touch here, touch here, touch here, touch here. But we're going to cover that in trend lines video. And then obviously the bottom part from the triangle is basically, you know, if we were to draw from say our low point to here. So this right here is indicating that we're coming towards a triangle. Now once price gets towards these triangle points over here, price tends to break out either way. Now in cryptocurrency, price tends to break out to the upside more often, because what you've got is people moving money between altcoins trying to make profit here and there, and we've got more money coming into the market as well to increase the overall market cap. So as more and more money is coming into the market, people are looking at their support and resistance levels, where price is on the Fibonacci levels. They're drawing these trend lines in to form triangles and so forth to see where breakouts are going to happen. And then down at around this time, so people will be buying around here, and then the price, as it breaks out of the triangle, that's obviously telling us that we're back into a bullish market and so forth. So they're the most common ones, guys, but the triangle point is going to be covered more in depth in the trend lines video. So I hope you enjoyed this video, and that's the video 3 for you.